What's the deal, good people? It's your boy, Dat Dude Dave, and I'm back with the Road to 100K, episode 4. And man, I gotta tell y'all, I was excited this week. On Monday, even though the trade didn't go my way, the market was going down. I thought this was it. I thought them crash outs was about to cash on in. But, the market started going back up, during the end of the week. And so, it is what it is. But let's get into the trades. First thing first, let's look at the account. Now, if y'all remember from last episode, I said that I'm gonna have to go into my demo account. Did you see there where it says demo? And you look, the balance is $9,107.56. And that's not too bad considering that we was at $8,492.48, meaning we had a net profit of $615.08. And I was thinking about this and talking to a friend earlier about it, saying, man, why can I do good in the paper account and in the demo, but it don't seem to work out what you're doing with real money? And that's when you realize that mindset is a real thing. You got to get your mind intact in order to be an effective trader, in order to be a consistent winner, right? You got to take all emotion out. You're looking at your edges, you act upon your edges, and you roll with it, and you manage your risk. So Monday, we started out bad. Remember I said the market was going down? Well, in fact, we actually lost both of the trades that we put in. We did an attempt at a call spread, not getting the full training on it yet. But because it's the demo account, I said, why not? And I lost a total of $124.25 on Monday. So on Tuesday, I did an attempt at the evening trade, which is a continuation trade, meaning that once 6 o'clock rolls around, the market opens back up, and I put a trade in at that point. Also, 2 call spreads. This is when I first started doing the hedging my call spread. So essentially what hedging the call spread is, I'm going to place a trade that's going to go above in a certain price range. And then I'm also do one below in a certain price range. So Wednesday was the hedged call spread. And I did one for 40.80 to 41.20. And I also did another one from 41.20 to 41.60. Meaning that the market, as long as it falls anywhere within those two ranges, I was going to be a winner. Now, I still don't understand whether to sell or to buy above a certain number in that call spread range. So I'm still playing around with that. But once I figure it out, I'm going to let my people know. But this week, it just seemed to work out. So Thursday did the same thing. I did a call spread between 41.20, 41.60, and 41.60 and 4200. That's when the market started to go back up again. I was like, I thought the crash was happening. So Friday was a little bit different because it goes off of the trading range that the market is currently in. So I did a call spread between 40.90 and 41.30, and then 41.30 and 41.70. And I almost lost that because the market actually finished at 41.69. Now, I got to be honest, I also wanted to do the daily trades like I normally would do, how I would start off with the building the account up and then graduate into the call spreads, which is what Chris Cole says, how you're really going to snowball your money. But I got to be honest, right? So also during this week, I blew up my account trading on the bond market side. So we sign up with OneUp to go through an evaluation account so we can try to get funded a certain denominational account, whether it be $25,000 all the way up to $250,000 trading account. Now, what you do with this account is you actually trade and make real money. And you can, and the profit sharing split is 80-20, meaning whatever you make, you keep 80 and the company or whoever funds you gets 20%. Now, when you first sign up with OneUp, you get a 14-day trial, which means that you can try it out, see if you have the skills to go ahead and do trading, day trading on a regular basis. And if you got the skills, you can go ahead and pay for an evaluation account to see if you can pass the test. So, mindset once again, right? In the simulation, I'm money. When I get into the real thing, the pressure is on, and I take it a little bit too seriously. And so that's the learning lesson I got from this week was, listen, I got to treat this really like a game, because it seems like a game, right? All I'm doing is entering the market and getting out the market at a certain period of time, and I'm looking for the ticks. Each tick per contract represents $31.25. I do that on a consistent basis. All I do is worry about getting the ticks, and then don't worry about the money. But of course, when the pressure is on and people need money, well, then you start to do different things, right? The whole saying says that desperate people do desperate things. And that goes right back to your mind. How to block everything out, how to get into the moment and focus on the three important things, right? The things that you can control when it comes to trading, where you enter the market, where you exit the market, and how you manage your risk. So yes, been in the BWO since the mid-February. Trading really caught my attention. Really want to devote some time and energy into it. I've been doing it about a month and a half, 2 months fully at this point. And I gotta say that the concept is simple, but it's not easy, right? So there's a difference between there. So it's simple to understand the mechanics of it. Enter in, if you're trying to buy the market, enter in low, sell high. If you're trying to sell the market, sell high and buy low, because that's the only way you get out of the trade in a sell. I have to buy it back at a lower price to make a profit. But when it's real time and you're in that moment, I mean, you get the butterflies inside your stomach. You get a little antsy. The market doesn't go exactly the way you want it to go initially. The stuff, it builds up, it builds up, it builds up, and then you just gotta sweaty palms. You gotta be able to deal with that, internalize it, and power through it. And not to mention, you have to deal with distractions, right? At this current time, people have jobs, right? You have small ones, you have little ones that you're taking care of. You got things that you got to do on a regular basis. And it's hard to sit down for a certain period of time and dedicate and focus and block everything out just to do this trading thing. Now, there are other markets that you can trade, but we're learning about the ZB, which is the 30-year note, and ZN, which is the 10-year notes. You can trade the S&P 500, which is the ES, and there's all these other letter denominations for markets that I don't know yet, and we haven't been taught. So, we're just dealing with these markets at this current time. All right, so I think that's going to wrap it up for today and this week. Once again, got to focus on mindset. Got to get back to reading Trading in the Zone. Get to the psychology of it and understand that you're really dealing with yourself, right? So in the book, he talks about the cycle that people go through who naturally say, hey, if I learn more about the market, then I can do better I can be a successful trader. But the more you learn about the market, the more when it goes against you, you start having some emotional ties into it. Because if I'm learning all this information about the market and I'm still losing, something is not right, right? Something's got to be wrong with the market. But not understanding that it's our own internal thoughts and the way that we process it is how it transpires, or it relates to how we actually perform when we're in the market. All right, so that's going to be it for episode 4. Stay tuned when we go to episode 5. We'll still be in the demo account on the Nadex. But this time I'm going to try a different strategy to try to maximize the money that's in there, right? Because we have a large bank account in there. We're up to $9,000 now. Now we got to find the best way to maximize it, to grow it as quickly as possible. So it's your boy, Dat Dude Dave, and I'll see you next week. Peace.